That's the opening bell on Wall Street. Forbes gets the honor today to celebrate the 2026 world's most influential CMOs. Because if there's one thing the world needs, is influential CMOs. Here's a look at the markets this morning as they open. Stock futures rose in the first trading day of August while oil prices slide. Investors are also waiting on another busy week of earnings reports. Let's bring in David Uberti. He's a reporter covering financial markets for the Wall Street Journal. Good to have you.
Thanks for having me.
So let's talk oil prices. We've seen that prices are down. Stocks are up. That generally happens because there's an inverse relationship. But what is the long-term prospect for oil stocks in particular? I mean, those companies, their earnings are gangbusters, no matter what's happening in Iran.
They're doing incredibly well. I mean, when you mentioned those updates, like you said at the outset, about this potential headway on peace talks, four words come to mind. Here we go again. We've been in some sort of limbo with this conflict for several months at this point. There's been peace talks and bombing campaigns and peace talks and bombing campaigns in financial markets that has kept the price of oil, some would say artificially low. In the 70s, now we're in the mid-80s. That's still higher than it was before the war. But at the same time, the physical supply disruption is real. And if you look at the number of ships that are actually making their way through the Strait of Hormuz, it hasn't recovered to pre-war levels. This is something like 10% of what it was pre-war. And so that's sort of a ticking clock for the extent to which these prices can stay low. If China, which is a major oil importer, decides to ramp up its imports to the extent they were before the war, we could see much, much higher prices in the U.S. as well going forward.
So, David, another big story making global headlines is the U.S. dollar to the Japanese yen exchange rate. And the U.S. Treasury is saying that it may intervene here to change that. So what's happening? Tee this up for us, and what could this mean for Americans?
So the Japanese yen has been historically low against the dollar, 4 decades or so low, and the U.S. and Japanese governments have made a joint intervention to prop up the yen, to strengthen the yen vis-a-vis the dollar. And for Japan, obviously they want to do this because they're a large energy importer. They need a lot of yen to buy oil priced in dollars. But at the same time, from the U.S. side, Japan owns an extensive amount of U.S. treasuries, U.S. government debt. And if they were to sell some of those treasuries to buy yen, to prop up their own currency, that could have ripple effects in the United States that could push up borrowing costs for mortgages, credit cards, et cetera. So that's why you're seeing some of this action take place now. But financial markets are very tough to work against. You mentioned before we went on here that this could sort of screw up people's travel plans. The yen has been great for American travelers.
Yes.
It is more expensive for Americans to go to Japan today than it was yesterday. But that said, the yen is still pretty weak. If you want to go to Tokyo and enjoy yourself, it's still probably a pretty good time. Your dollar will go pretty far.
Well, as the president said, Japan's been very good to us, except for, of course, Pearl Harbor. I'm quoting the president there.
Sure.
But you raise an interesting point about why it's important to support the Japanese yen. And it is true that when the yen being as weak as it is, Japan is still a wonderful place to visit. It might be a little expensive traveling there, right, because of oil prices.
But once you get there.
Once you get there, good to go. David, always great to have you. Thank you very much. Appreciate it.